Hello, hello, testing, testing, hello, hello. Okay, hello everyone. Welcome back, everybody, for another test live stream for my Japanese Company Handbook challenge. The goal of this live stream is to streamline a process for reviewing stocks and to ensure my streaming setup is optimized for my upcoming challenge. Today, I have two special requests. One is from, I won't go through the people who kindly offered some special requests. The one is T-Bone Capital. He suggested 1814 Daisui Construction, and also be doing RV number 2546. Thank you for contributing. I'll be looking at 4331 Take and Give Needs Company. So we will be doing these two names first, and then we will I will do one first, and then I'll continue with the Japanese Company Handbook challenge, and then by the 1 hour mark I will do the second one, and then we'll also continue the challenge. So that's probably going to be our process. I'm going to be streaming for around 3 hours today, and yeah, just gonna do the live stream test today. And the goal of every live stream test is to just incrementally improve from the previous one. So I don't mind sharing with you some notes I took the last time I did a live stream. So one thing I realized was that when I was analyzing these companies, I would keep silent for an extended period of time. So what I'm trying to do is to fill in the quiet space, and I can do that easily by reading the business description out loud. Essentially, anytime there's something to read, I'll just read it, even though it's slower than me reading it. I think if you have my live stream in the background, listening to it passively, having me read it out loud is way more engaging than me being silent. And I'll also talk through my analysis. Last time I noticed that my the VOD, basically the uploaded version of my live stream, was only at 720p, and this was because my bitrate was only at 2500 kilobytes per second. I noticed my internet is fast enough, so I have set it now at 1080p and 9000 kilobit per second at 60 frames per second. I'm going to be seeing if this works out or not. Hopefully it does. And there's no connection issues. Currently, my connection is excellent, which is great. And I'm going to be trying to time each of my analysis. I'm not trying to take too long. Sometimes what happens to me is that analysis paralysis. I might take a long time to, analyze a company. So what I'm going to do is I have this kitchen cook timer here. Any stock that I look at, I will spend a maximum of 15 minutes on it, and hopefully every 15 minutes I will finish one stock, and basically in an hour I finish 4. That would be the ideal scenario. So yeah, without further ado, let us let us start. So the first company that was recommended to me was from T-Bone Capital, which is Daisui, if I pronounce that correctly. Daisui Construction. Let's take a look at the stock. Yeah. So interesting fun fact about the stock. I have owned this stock previously in the past, and I came across this stock because of Michael Burry. I found it interesting that because every now and then he'll own a Japanese stock in his portfolio. And then this is one of the ones that came up, I think around, if I remember correctly, like 2021 or 2022. So I have made money on this stock before. Yeah, I think I might have bought it around like the 1000 mark and sold it for like the 1500 mark previously, a long time ago, and made like a 50% return, something like that. But I haven't revisited the name in a very long time, so it'll be interesting to look at. If I recall correctly, previously the company just traded at really low multiples. So it's more of a deep value play probably. For those who are not familiar with the company, let's go through the description real quick. So Daisui Construction Company Limited operates as a construction company in Japan. The company is involved in the construction of condos, offices, logistic warehouses, factories, medical facilities, and wedding and funeral homes, funeral buildings. Also engages in the provision of repair, extension, renovation, and seismic diagnosis of existing buildings. The company was founded in 1937 and headquartered in Osaka, Japan. Okay, next let's take a look at the valuation, enterprise value. Okay, so this company has so they recently raised a lot of debt. That's what it looks like. Historically, they've had a lot of cash. Let's take a look at annual. I had an LTM just now. Interesting. So previously they had very little debt, and all of a sudden they decided to raise debt. And previously they had a negative enterprise value, and now it's resurfaced. Interesting. Now the question is why? Let's take a look at the income statement, see if we can figure out why. Let's look at the current enterprise value first. What is the current enterprise value? So if these numbers are 23 billion market cap, net cash of around 400 million, so basically negligible. So this is basically the enterprise value, right? So around 22 billion enterprise value. Okay. Multiple wise, it is trading at, so if it's 22 EV, let's take a look at the income statement here. MS3. That's Q3. What's Q4 usually? 1.6, 1.8, 2.7. Let's look at the annual. Okay. What's interesting is the operating income has gone down. How about the revenues? Revenue's gone up. Gross profit has gone down. How much has it gone up by? Roughly 20% from here to here. Gross profit looks like it's dropped around 15%. This 2019. Operating income has also dropped. Huh. Doesn't look very good. LTM 3 is good. 3 on 22. Roughly 7 times EBD EBIT. The quarterly results. So okay. Had a pretty good quarter. This adds up to around over 80 billion yen. So they've been having a pretty good recent earnings results, as it looks like. Another question we have is, why did they raise that much debt? So I have to figure that out later too. I'm gonna write this in the notes. Why so much debt? Oh, forgot to post stuff in chat. Let me quickly do that. Yeah, so if you guys look at the top right corner of the stream, you will notice that it says recent subscriber Celeste Barcia. That was a subscriber for my last stream. So if you guys aren't subscribed yet, subscribe, and then a nice ringtone will come up, and then I will be editing the stream so that your account gets listed, and yeah, you get featured. It's great. And yeah. Right now we're looking at 1814. ISV construction. Yeah, bottom. Okay, back to DiceSuite. One question I had is, why do they have so much debt? Got to figure that out. It also looks like they have increased their revenues as of recent. Increased their gross profit as of recent. Sorry, on a quarterly basis. Yeah. Yeah. Gross profit has gone up. Operating income has also gone up. But what concerns me is, why did they decide to raise that much debt? That I do not know why. That is going to be a question for us to dive deeper into. Let's take a look at profitability. Okay, so return on assets, low single digits, ROE. Mid to higher single digits. Yeah, so it's a low margin business. Yeah. ROIC is really low because they what about LTM? What does it look like? I mean, they are raising debt. So ROE will increase. A construction company. Okay, so to get to the answers, we will look further into the investor relations. I'm going to quickly look at if there are consensus estimates. There are none. Okay. So that's for us to figure out. Let's go to DiceSuite. Oh, they have an English side. That is awesome. That saves me a lot of time. IR information. Oh, they only have IR news. Okay, maybe they still have the financial briefing. Okay. Do they have an IIP? Implementing materials. Okay, let's take a look. Oh, okay, good. Nice. An English investor presentation. That's always nice to have. Okay, offering profit margin has gone up. Okay, so they have residential, non-residential, and renovation. Renovation taking up a very small percentage. Residential taking 54%. And non-residential going up 40%. What's interesting here is that the non-residential used to be a 25, 28, 16% type of category, and then it has gone significantly up. So another question I have now is, why has non-residential gone up so much? And potentially residential, they might have had a good year in fiscal 2024. So maybe another question is why residential was so good or spiked in the fiscal year 2024. Oh, actually, no. This is fiscal year 2025. So why are they forecasting non-residential to go up by that much? Okay, so that's another question we have to answer. Yeah. This is just a look at what type of real estate that they constructed. One thing I like about investor presentation is, like, to me, this is like manga. In that when I see images, it helps me kind of like get a picture and a visualization of what the company does. So this I actually do find as helpful. I don't like just looking at financial statements where they're just numbers. I thoroughly enjoy looking at these pictures. So we can see, what type of, this pavilion is obviously non-residential, right? And then these look like condo buildings, right? So these are residential. Hello, 8 Greetings from the hillside. That was formerly known as Twitter, and I have no idea how to change my YouTube username. No, I'm a fossil. I believe if you go to your profile, somewhere, you should be able to add a username. I don't remember off the top of my head. Yeah, I think a lot of investors would have come across Dicey. Yeah. Okay, next. So they said gross profit increased by 46.6% year on year due to improvements in profitability of constructions and increased net sales. And gross margins spiked 9.2%. Profitability of construction, increased net sales. Well, is this because they got cheaper materials, or they were more effectively able to use their labor force? What is the reasoning? I wonder. And residential seems to make up a bulk of their gross profit. So if we go back to the previous image, right? Oh, okay, so this is 15. Let's see, what is this? 15 for non-residential in revenue, and then 1.2. So around like 9% here. And then what was the other one? Other one was 68 billion, and you got 5.7. So this is single digit. This is like, 7-8% gross profit margin. Okay, so operating margin, why has it gone from 2 to 4.2%? So let's take a look. Completed construction balance. Construction profit. I don't know what that means. Completed construction balance. So maybe they had some construction down the pipeline. And then construction profit, so construction profitability increased. Real estate business decline, SG&A. So okay, so SG&A actually declined. So actually labor costs increased. So this might have to do something with material, like construction materials, probably. Interesting. Oh, spend 15 minutes. Well, since I got distracted, I don't mind spending more time on this. So let's keep looking. Consolidated order balance increased 21% year over year, boosted by several large-scale orders in a non-residential segment. Yes, so that's probably okay. So they basically, so the thing different between orders and sales is they of course get orders before they actually build a construction, and then when they actually build it and the transaction takes place, then there's sales, right? So one way you can forecast how Daisui is going to do in the future is essentially by looking at what is their order balance and what is coming down the pipeline. Here they're forecasting in 2025. We can in the medium range, but now for fiscal 25 we're gonna actually get way more residential orders and slightly less non-residential orders. So for fiscal year 2026 we can expect a lower sales mix of non-residential and a higher mix of residential here. Okay, interesting. So they're saying that they're getting a much larger amount of orders of logistics warehouses and factories and commercial facilities. Oh, interesting. Yeah, these are the non-residential, right? So if we look at the sales of, the order balance for condos, we can see that if you can follow my mouse, yeah, you guys can follow my mouse. I can zoom in a little bit. Condos went up to 78 billion in fiscal year 2023, and it dropped a little, but it's in that 58 billion vicinity. And then logistics increased substantially. Interesting. The answer: why residential? Oh, we don't know why. I don't know why residential spiked in fiscal year. They didn't say it. But the reason why non-residential spiked in fiscal year 2025 is because they're getting there is increase in orders for logistic warehouses. So I don't know if this is some type of macro trend, due to e-commerce and whatnot, or whether they just won some big contract from some buyer. That is can't really tell. Government buildings also increase a little bit over here. Commercial buildings, commercial facilities also increase quite a bit, so that's interesting. Kanto region is stable while Kinki region increased significantly. Okay, so potentially the logistic warehouses are in the Kinki region. Okay, it's worth noting that they have 1.8 billion in investment securities. Yeah, so that's another part of the equation that you don't really see on Koyfin. One of the downsides of Koyfin is they don't factor in the investment securities in the calculation of EV, where you can definitely factor that in for sure. But that would only lower the enterprise value here by, because we previously determined this was 22 billion, so around 20 billion currently. So the main thing I want to figure out is why did they have so much debt? Right, that's what I'm trying to figure out. Did they actually have much debt? Let me just take a look at their financial statement. Just double check the balance sheet. Okay, a reduction in cash. Investment securities went down. Current liabilities. Short-term borrowings went down. Current portion of long-term borrowings is around even. Long-term borrowings. Wait, what the heck did Koyfin? Why did they say that? What? What is this? What is this crap over here? Oh, that was Q3. Okay. Interesting. So, what happened in Q3 then? Let's take a look at Q3. Financial briefing. So they had a temporary short-term borrowing of 7 billion. Long-term borrowings of 2.7. Okay. Potentially what this was is, you know, sometimes these construction companies, they might have to take on some short-term debt in order to, you know, put some cash up front for construction. So it's probably not something to worry about. So I would say that that is not really representative actually of the case. So whatever this quoted enterprise value is kind of outdated because this is only Q3 fiscal year 2025. The period we should be looking at now is Daisui in this year. So let's quickly, because I haven't even had the chance to use you know, one of my own screeners to calculate enterprise value. So we're just going to do that really quick. Daisui construction 184. This was fiscal year 2020. I think they stated 2024, right? No, I'm pretty sure they said because they're forecasting 2025 now. Okay. So share price, I'm just gonna trust at 2171. Okay. Shares outstanding, so we're gonna go quickly look at that. A million shares, treasury shares of 167,000. Yeah, okay, 22.68, that's exactly correct. That's in line with that. Let me quickly look at dividend yield because they do have that here. So they have increased dividend yield. Okay, quite nice, from 70 yen a share to 99. Okay, 4.6% div yield. Okay, that's a pretty healthy div yield. And they're forecasting in fiscal year 2026. Sorry, forecasting fiscal year 2025 108. So we should be putting the 108 in amount. So that's 5%. So even better, even better. Nice. Hey, 888, have you subscribed? You can get your name onto the live stream if you you know. Oh, I just know if my thing is a little bit zoomed out. Hello, hello, hello. Why am I so blurry? What? Get me back in frame, buddy. Get me back in frame. Get me back in frame. All right, sorry guys. Well, you're just gonna have to deal with a blurry Alan for now. Oh crap. Why? Okay, let me do add to dynasty. All right. Well, if you don't subscribe, as long as you okay, thank you. Yeah, yeah. Okay, I'm gonna continue with the analysis. So let's do cash 4458. Notes receivable, that's not it. Real estate for sale, no. Okay, so that basically goes, there's no short-term investment, so it just goes down pretty much to investment securities, which is 898. Okay, so they sold even more investment securities, so it's interesting. So they sold in some investment securities recently. Short-term debt, pay that down, and also current portion of long-term debt. So as well, let's see if there's anything else. Nope, don't see anything else. Long-term borrowings, 2654. Dropped. And significantly, well, not significantly. But yeah, total debt has significantly dropped since Q3, essentially. Yeah, so that's probably some type of short-term thing. Yeah, I don't see any lease liabilities. Book value of 23 billion. Okay, so trading basically at price to book right now. Yes. Do you have any NCIs here? I don't see any NCIs. Yeah, okay. Yeah, so right now, essentially the company is valued at, if we exclude long-term investments, 21 billion enterprise value, and then including long-term investments, 20.5. So it's still pretty close. A little bit less than what I originally calculated. Yeah, I got that Japan AV swag going on with this blurriness, you know. If you know, you know. Okay, so now the question is on the tier list, you know, where does this go? Where does Dicey go? Let me look at a little bit more about the company. I do want to see one other questions. Why so much debt? So that's probably for some short-term need. They have more orders coming in, but the question is now, are the orders sustainable? Do we see the orders continue to flow in? Is there some type of government deal that's going on? Is there a resurgence in, you know, because they got a lot of orders from logistics companies, so is there some type of logistical upside here? Hmm. So they expect increase in fixed costs due to personnel expenses. Yeah. The question is, even though there's abundance of construction work being carried over, what happens after that, right? So they have a DOE of at least 4% and a dividend payout ratio of at least 50%. So given the div yield we just calculated was around the 5% region, some investors might be happy about that. Wonder if I just put my hand here. Okay. Come on. Hold on my hand. Okay, whatever. I give up. Okay, they say the price of book is 0.84. This was released in May. Take a look at that real quick. So if we look at year to date in May, it was okay. So it has gone up. Yeah, so that is still probably accurate. Czech National Pavilion. Hmm. I don't get I didn't get really much commentary above, the first 2 years because we know what the forecast is in 2025, right? So this looks good, right? Increase in sales. Um, and then we also have a breakdown on orders, right? So forecasted in 2025, this is what our orders are going to look like. So again, we're going to have decent results for fiscal year 2026. But then what about after that, right? Is this logistic warehouse thing, commercial thing, sustainable? Will we get a future bump from condos and apartment buildings? That's the thing about construction companies is like because the sales are so volatile, right? Because you always will pitch yourself and provide proposals for people who want to build something, you might not get chosen, right? If you win the contract, that's great. If you don't win the contract, that could be, not so great. So yeah, that's the thing that's questionable here. But let's see if in the in the financial statements there's some commentary. Business environment remains severe due to soaring construction material prices, rising labor costs, and labor shortages. Okay, I don't see anything, you know, stating, giving me, confidence that, it's one way or the other. So let me just do some searching. Outlook, no. Forecast. Excuse me. Yeah. Yeah. Yeah, I don't know. I don't know enough about this company in such a short period of time to really gauge that. So I guess if you have a better understanding of, where Japan is headed in terms of logistic warehouses, and I would put, if I had more time to look at this company, I would take more time into figuring out, how they were able to get these contracts and orders and whether this is sustainable or not. Because I would imagine any construction company, and the reason why this company has, potentially historically traded at quite depressed levels is because, yeah, as we can see, like some years get to 64 billion, and it drops to 53 billion, and then jumps back up to 65 billion, and COVID hit dropped down to 56, and now, yeah. And then if you look at the profitability of these, businesses, they're in the single digits, right? It's in the single digits, right? And yeah, yeah. So, it's a, rather capital intensive business, I would say. But yeah, okay, let's go to the tier list real quick. So tier list, where would I put this? 1814. I think the way to play this honestly is, like historically, like if it gets to a very depressed level, right, then it becomes an easy buy. You know, it can trade anywhere between like 2 times EBIT 1.7, and then multiple expansion all the way to its current 8 times multiple. Um, yeah, So you can make a lot of money on just multiple expansion alone. And that's, if you had bought in, Jesus, 5 years, yeah. 5 years. Well, I got in 1,000, but you could have gone in even earlier, at the lows 2020s. But yeah, yeah. So I think this is one of those deep value things where, like, if the multiple does get depressed enough, then it becomes just a buy on mean reversion alone. But I think at these heights, I don't think it makes a particularly attractive investment, in my opinion. Yeah. So based off of that, I would put this at a C. Yes. Okay. I spent like 30 minutes on this. That's not very good. But this is fun. So I don't mind. Let's take a look at some notifications. Oh, thank you, Agent Scion. Shout out to Agent Scion. Okay, nice. Okay. Cool. Next company, 4331. Let's take a look at that company. I have never seen this company before, so this will be new for me. Take and Give Needs Company engages in the wedding business primarily in Japan. Interesting. The company sells products and services for honeymoon and anniversary travel. Nice. Provides financial services for weddings. Okay, so you can finance your wedding. And related lifestyle items and designs. Produces, sells, and rents bridal and formal wears. It also manages restaurants. Take and Give Company. It was incorporated in 1998. Okay. So as we know, there is a declining birth rate in Japan. People are getting aren't getting married, and those that get married don't have kids. So this is kind of like a negative cycle of less people have kids and less people getting married, and then that's why the population is declining. So let's take a look at where the price has gone. Okay, high of 2,400, low of 400 something. Went up a lot and then has been tanking. COVID happened, people aren't getting married, and then restrictions relax, people are getting married because you basically, if you delay a portion of time where you're getting married, and then you have a basically kind of like dice reconstruction, you just have a backlog of people trying to get married. So then, of course, the offering results will be quite decent. But then, after you fulfill that short-term period of demand where operating leverage allows your margins to look quite nice, I haven't even looked at it yet. I'm just making these assumptions. Then essentially that tapers off, and you might even get a period of time where a lot of people get married. And so that kind of like, you get a period of a lot of orders, and then because people, all get married at once, and then that then in the subsequent years it doesn't look as good. So maybe this is that type of scenario where it's kind of like tapering off type of thing. Cool. Financial company. That's such a weird name. Take and Give Needs. When people get married, are they taking and giving needs? Philosophical question. Not sure. Okay, let's see. Excuse me. Interesting. So fiscal year 2022 went up to like growth multiples even. I don't see why a wedding planning company can go up to growth multiples. That's kind of interesting. So it has dropped down to its, almost previous lows of around 7 times. It's right back in that region. Okay. What does the enterprise look like? Oh, they have debt. They have debt. That's a lot of debt. So why did this company use that much debt though? Okay, so that's something we have to figure out. 4331, and why so much debt? Take a look at profitability. Oh, yeah, COVID was a rough year for them. Yeah, the thing about these wedding planning things are that, you know, they're kind of asset light. Are they? Return on assets are pretty low. I take that back. I'm gonna keep analyzing this company first before I make a statement like that. Very good profit margins. Labor intensive. Okay, SG&A. So yeah, you have wedding planners. You have. Okay. Net income margin really in this low single digits. Yeah, I don't like that. I don't like that. So they're not able to. Yeah. Okay. Potentially, there's no real operating leverage in this case. Like gross profit margins are really healthy, but then you have to spend a lot on hiring people. You know. And Japan is a country where you don't skimp on customer service. It's one of those countries where, you know, you would go and above and beyond for something, you know, as special as a wedding. I just had a thought. Potentially, this debt is due to financing because they said they do financing for weddings, so that could be that. So since they have so much debt, let's take a look at. Hmm. Okay. Oops. RIC. Yeah, not great. Not great at all. Okay, so I'm already not liking too much about what I see so far. Take a look at income statement. Oh, revenues has tanked. Oh my god. Okay. Well, that is in line with that is honestly in line with what is happening in Japan in general, right? You have, you know, less people getting married, less people having kids, right? Uh, hmm. But I guess the nice thing here in this regard is that SG&A is they are able to control SG&A to match revenues in a sense. Um, Meaning like, okay, if there's more weddings, then there's more labor required. If there's less weddings, then there's less, unless you have a severely unprofitable year in COVID, but then that's understandable because you have some fixed costs and you have some fixed personnel. You just, you know, it's harder to get rid of. And Japan is a culture where you have a lot of part-time employees. Um, that is okay over there. Interesting. I'm gonna quickly take a look at the IR, and see if there's any angle here. I don't really see a huge one. Like I don't see how they can substantially increase their, you know, the amount of weddings, you know. Like I think this is more of a macro thing. It's rather difficult. IR information. That was all the IR information. Oh, they have English site. Nice. IR, please. Recorded video. I just want the why not just give me the latest IP? Why give me the video of it? Okay, I'll look at financial report then. Okay, so they're up to Q3 right now. So let's see what the company states is their issue. Oh, they don't even state it. There's no commentary whatsoever. Wow, okay. I guess English people who speak English don't really. Okay, so it's probably I have to look at Japanese side. I'll just quickly look at the Japanese side. Shouldn't take too long. Yeah, so not really good support for like not very good support for English shareholders. A briefing video is interesting. Like I feel that's very like marketing. Potentially using that as an opportunity to market, you know, to people who are getting married, potentially. I'm just translating the documents right now, so give me a second. Yeah, that's the issue with some companies that don't report in English. I mean, it's fine. It kind of comes with, you know, the lay of the land. Okay, we have the IP now. Over here, I need to also translate the financial statement. Okay, let's look at the IP while we wait. Sales increased due to the expansion of the hotel business. The average wedding price slightly fell short of the plan, resulting in decrease in operating profit. Okay. People are paying less for weddings. Okay, so number of inquiries increased 106%, so a 6% increase. The number of orders 100%. The number of orders is matching. Well, if the average wedding price drops, right, then sales would decrease. So you either have to have number increase to amount enough where the increase convert into orders, in a way that offsets the decline of the average wedding price. Preparing for global expansion centered on hotel business, which is a growth driver. I don't know how I feel about that because they're a wedding company. Okay. So sales slightly increased, but then profitability declined. Okay, so they had a decrease in number of weddings. They had a slight increase in average wedding price. SG&A expenses increased, so labor costs, advertising, hotel business increased. Okay, so number of weddings dropped actually. Oh, interesting. Other group businesses, consulting, restaurant business, travel and financial, and hotel business. So these are helping offset their main business, but their main business dropped, right? So this is not a good result, right? Like you would prefer if their main business is doing well and you have, you know, like am I investing in a wedding business or am I investing in a hotel business? What am I investing in? Okay, so they have a good backlog going on. So 4 million yen for a wedding. So that's around 28,000 USD, or roughly. I guess the encouraging thing is that their average price has increased from 3,500 yen to around 4 million yen. Yeah. The price has gone up. Okay, so they're getting some increase in demand from overseas, which is nice. Wedding business. Ah, okay. So there is okay, so I guess there's some benefit to owning some hotels because you can, of course, you host weddings at hotels, right? So if you own the hotel, I can, okay, this is slightly better than if, you know, a complete unrelated company owned hotels. Oh, wow, this is interesting. They have a vacancy rate of around 6%. You know, this is good. Yeah. Hmm. What is the enterprise value of this company again? 12 billion market cap. Then enterprise value is, so they have these hotels. They're probably using debt for the hotels, is what I'm probably seeing here. Essentially. Yeah, let's take a look at the downloaded financial statement real quick. I think that would help me inform my decision. Let's take a look at the recent financial statement here. Cash operating. Okay, so very little investment securities. Debt wise, certain portion of long term debt, short term borrowings. Hmm. Does anyone in the chat know why they have so much debt? Or is it just from hotels? All right, so going back to the enterprise value, right? So fiscal year, do they have the current fiscal year in here? No, they do not. So Koyfin is also 1 quarter late here. But we can quickly calculate the enterprise value here. Oh, I should have, I guess that's fine. I guess I can just redo this. Let me just copy. Okay, so we can just literally just go like this. Okay, take and give needs. 4331. Last quarter fiscal year 2024. March 31st, 2025. Share price. This company has a share price of 832. You have this. Shares outstanding. 14.61933, 14 million shares, barely any treasury shares. So 12 billion market cap. Take a look at the balance sheets. All right, so cash. 9 billion cash. Okay, negligible amounts of investment securities, so we'll just ignore that. And then short-term borrowings, 880. Long-term debt there. Debt 14 billion. Long-term lease liabilities of 3105. I don't really include that because they typically pay it off in their income statement. So it's worth noting, but it's not something you have to include in the calculation of enterprise value in this case. Okay, 0.67 price to book. 24 EV. What is their dividend? Okay, so they are lowering their dividend. Well, they have debt, right? 3.7% dividend. Okay, so 23 billion. What is are there any consensus estimates here? Oh, it's 15 minutes. We go another 5 minutes here. So sales relatively flat, not resurfacing to its pre-COVID levels. EBIT expected to drop. So 3 on 23, right? That's around 8 times, slightly under 8 times. Do I like that for a company that's likely in some type of secular decline due to less marriages? I don't see a real value proposition from them yet. And then their margins also don't really state that they have, any type of competitive advantage in the, wedding space, given their, thin margins, I want to say, because they are competing with some mom and pop people who do wedding planning. And they're in a transitioning period for the hotel business. So then I would just end off with this remark. If there is value here, it would be coming from a sum of parts analysis in, okay, what is the hotel operation worth? Sorry, one second. Okay. So this is just the hotel portion, correct? Is this, or is this consolidated, right? We know what their do we have a segment breakdown here? Okay, others is really low. Others is really low, so I wouldn't even, this is not. Their trunk hotel pictures vendors look nice, yeah. Yeah, the hotel business is just getting started, right? So like, what I was gonna get at essentially, right, is if the segment profit gets to a certain stage, let's say they continue, on the line of being profitable in the hotel business, right? Okay, let's see, increase from 266 to 370, right? But let's say it gets to a point where it's like something's fruitful. Like let's say it gets to 1 billion yen, right? Now, what is a appropriate multiple for a hotel business operator, right? Um, and now because they own the hotel space for the conference hall, they can host hotels, and maybe it boosts margins potentially. If it's 1 billion yen, then okay, what is the appropriate multiple to apply to that? And then there could be some argument where like a sum of parts analysis allows it to like, let's say segment profit of let's say this is 400 yen, right? And we believe a 8 times multiple of this is appropriate, right? So that'd be like 3.2 billion yen, and then we just calculated their enterprise value is around 23, so 3.2. So you're paying 20 billion yen for the rest of this business. So then you have to ask yourself, is 20 billion yen on 5.844, a 3.5 times a billion. 1 second here. Five. $25. Did I calculate correct? Let me just double check I calculated this stuff correctly here. Yeah, 6.2. Okay, yeah, they had more debt before. They had more debt before. So they are paying down debt. And multiples. PE basis. Yeah, so they have this debt, they can pay it off. Then okay, I see some merit in this. I don't think it's 5.844, 3.126. The quarterly results. Okay, Q3 is one of their best quarters, eh? Yeah, Q3 is historically the best quarter. Q4 is winter time less. Interesting. So I guess Hmm. 4 billion. So they're forecasting some pretty good results. Yep, correct. I think it's the hotel portion, right? So it does make a little sense. Where was I going in this analysis? 23. No segment profit so good. Was that gross profit? I think that was gross profit. I don't think that was. Yeah, that was gross profit. That is not. That I'm mistaking this for 5844. Yeah, and we can double check with the income statement here because like. Yeah, 4. Okay, so then. I wonder if how profitable is the actual hotel business? Is there even like a thing that says how much hotel? We only got gross profit, right? That's not very compelling to me. I want to know the operating margin of the hotel is, if there is one. Right, it's not segment. It's not gross profit because gross profit is so damn high here. What the heck? Oh, domestic wedding business is 5844. Okay, 13% operating margins. And then how about the so is the hotel business losing money? Sushi Saito collaboration. Yeah, I've seen a YouTube video of Sushi Saito. So I want to expand award Asia towards Asia. Okay, I want to know more about their hotel business. Can I learn more about their hotel business? Boutique, high unit price, and high added value. That makes sense for weddings because weddings, you know, you want they're at their price point, you know, 4 million yen. These have to be more lavish. That's the name of. Yeah, yeah. Travel spending, travel consumption. Only 30. Number of travelers. That legit. It's based off the Japan Tourism Agency survey. Really? Interesting. Okay, you know more about the domestic wedding market is going up. Total of 5 listed companies, 16.82%. Do they have the highest market share, or are they just? I don't know if this is top 5 listed companies or not. Let's say top 5. They have 4% of the market. How much time? 4 minutes left. Okay, let's quickly look at if there's any hotel information. I would like to look for some hotel information. So directly managed hotels, 4 facilities. Directly managed restaurant, 2. Okay, so they don't have that. They don't have that many yet. They don't have that many yet. Business partners. Okay. They probably have some better rates at these hotels. See if I missed anything here. Just quickly look through this. Wedding business, hotel business, 516 operating. Business profit, operating profit. Okay, so hotel business did increase operating profit. Okay. I would like to, you know, spend more time. I need to quickly wrap this up. Hotel business growth, hotel business investment. Oh, so they spend money on investing in overseas expansion. Okay. Okay, as their recognition grows and they're winning more awards, they're receiving more offers, open more stores overseas. So I guess their branding idea is they want to make boutique and really high-end hotels and use those, open those overseas, and actually, you know, potentially expand their hotel business, and then domestically that would allow them to hold like higher end weddings. It's a lot of what ifs though, right? They already have so much debt, right? Like, oh, securities report. They have a securities report. That would make things a lot easier if there was a securities report where I can kind of see the stuff. It doesn't reconcile. The 4 billion yen that we see. Where's the differentiate? Where is the discrepancy here? You know, how does it get to 4 point something? That's what I want to know. Which is annoying, but okay. All I'll say is this: this looks like there is some potential. There's some potential because even at, let's say, yeah, I would like to know more about hotel business. I just don't have those figures. So what I would do is, you know, if I had more time, would be look into what is operating margin of the hotel business and what's the operating margin of the wedding. So there's a chance that with the acquisition and expansion of hotels, that would give them more opportunity to increase their margins in the wedding planning business, as you have a lower cost structure now, to having your own, you know, party rooms and conference halls. And then yes, with the hotel boost of, you know, expanding overseas and creating these high-end luxury, they could also expand their services overseas as well. So I guess there's that growth opportunity. And if, you know, and then if you look at it from a sum of parts perspective, you know, we said 23 billion yen. Let's say if we believe that the hotel business currently is worth, you know, 3 billion yen, is it worth it to pay 20 billion enterprise value for the declining wedding business? And then, like, how severe is the decline in the wedding business, right? Because as we can see earlier, there's a graphic on the state of the wedding levels, right? So it dropped significantly, but it has resurfaced, right? Like, it hasn't gone fully to, you know, 14 billion yen. I guess that's 14 trillion. So this is a 13 trillion yen market. Is it that big? Okay, well, you can look at the Japanese one and figure that out. But yeah, it hasn't declined that drastically. But as we also saw, like, the price of the actual wedding itself has increased as well. Wait, not over here, but over here as well. So it has increased to a level that's higher than pre-COVID, which is good. The question is, will this continue increasing, or they'll face pricing pressure because of non-differentiation? Yeah, so, you know, this could be something to look into. On the tier list, let's think about this. I think this is better than Daisui. It has some growth components, but then this requires some time to play out. I think you would get a better picture. This could also be the similar play as Daisui, like you wait for it to get, like, cheap. Take a look at the despite a decline in the number of marriages, market size exceeds 1 trillion yen. Maybe the rising cost of marriage is driving down the number of weddings. Let me think about that. Despite a decline in the number of marriages, the market size exceeds 1 trillion. Maybe the rising cost of marriage is driving down the number of weddings. You know, I don't really think so, because I think I don't think the cost of getting a wedding deters people from getting weddings. No, sorry, I don't think the cost of getting married deters people from getting married. right? I think it's in general, from my understanding of Japanese culture, is that people are just like not getting married. People are delaying getting married in general. There's other aspects about Japanese culture, such as, like it's over there. Some people believe that sex, the act of sex and love can be separated, meaning that you can have a husband and wife and they cannot have sex, and then it can be a sexless marriage, and then it would be okay for some couples. The wife will allow the husband to hire a prostitute, and be okay with it because there's no feelings attached, right? You can look on YouTube for this type of thing. Is generally a thing. But where I'm going with this is that people, the value of getting married in Japan is not the value. Yeah, I don't think cost is that thing, right? Because let's say this, for example, like let's say your budget is 3.8 million yen, right? And the cost of a marriage goes up to 4 million yen, right? I would think that people can cut some costs, like maybe book a slightly worse venue. I wouldn't say worse, but like more affordable venue. There's ways to get around it, right? And I also don't think this is most people, right? I don't think most people spend 4 million yen. It's just that the customers of Take and Give spend 4 million yen on a wedding, right? Some people have a cheaper wedding. Some people have more expensive weddings. I just think that Take and Give, it looks like that their clientele and the market they're trying to cater to are people with a deeper pocket, I would say. Yeah. Yeah, there are perks of getting married in Japan. They're like, for example, like I think you get if you're a family, you get a reduced cost on like rice. I think they had some pamphlets for those to help like single children families, sorry, families with children, just to help them with some of their household costs. So they're incentivizing that way. But I think there's some social issues that they I don't know if it's addressable or that they address. That are just hard to reverse, right? Like you need people to get married, and you need the couples that get married to also have children, right? In order to address the population, right? If two couples get married and don't have children, then the population will decline, right? Because once those two people, if they don't have any offspring, right? Like you need each couple to have two kids to net out the effect when they pass away, correct? So, like, yeah. And then if that couple decide to not have children, then the population will just continue to decline. So you have a scenario where the population is declining, people are getting less married, and also not having kids. So it's kind of like that's like a negative cycle that's happening. I generally don't believe Japanese, like any government subsidize, can truly incentivize people to really get married. I don't think it can ever be big enough, right? And people shouldn't force themselves to get married, just for the sake of government subsidies, right? I think that's yeah. Where was I going with that? So where I was going with this was, like, if I had more time to look into this, I would look into what is the actual growth trajectory in the hotel business. What will the improved margins look like once they once they have the growth driver in the hotels? Whether and what is the downside trajectory of the wedding business? Based off of the market size, it doesn't seem like it's declined too much, but it's probably still in the rate of decline. And also, are they able to consistently increase prices? Will foreigners travel to Japan to have weddings? That kind of thing, right? And then it'll become a sum of parts analysis, right? What is the real estate portion worth? What is the wedding business worth? Factoring in the decline, right? So you would probably, no, if I were to guess, right, you would apply something like a 8 times multiple to real estate business, and you would apply maybe like a 5 to 6 times multiple to the wedding business, and then you would make a sum of parts play here. And then you have to factor in also the opportunity, because they are highly leveraged right now. The opportunity in increasing market cap from deleveraging the balance sheet, right? So there's that aspect of as well. And it can be one of those scenarios where the price is dropping right now, right? It could also drop to the point where it becomes a no-brainer. So like, at what point does this become essentially a no-brainer? I currently do not know. Well, we can go historically. Historically, what's the lowest multiple this thing is traded at? Oops, this is a quarterly. Yeah, so it can drop to a pretty low PE. So it can drop to even like a 3.7 times, 4 times, right? EV/EBIT is dropping down to like 7 times, right? I would think that if it drops to around like a 6 times EV/EBIT multiple, then this could be a pretty good entry point for this company. But again, you are investing in a business that requires some timeline to play out. It won't be an immediate play out, and yeah. But I think this is a better currently is a better opportunity than ISWE. Yeah. Okay. Next. I'm going to quickly get some water and then I'll be back in around 5 minutes. Be right back. Not right back. Okay. Okay, we are back. Thanks for staying on. 888. All right, let's continue. Japanese Company Handbook. Okay, so where did we leave off last time? Okay, so we left off on page 93. Okay, so trial holdings. 141A. The overview. Okay, so recently it has been on a decline. Pretty new stock, it seems. Description. Trial Holdings operates in the retail, logistics, financial, and payment services and retail tech business. The company operates discount-based stores that provide food, living, wear, and home appliances. It also offers various solutions utilizing IoT devices and software services. In addition, the company is involved in real estate, restaurant, and resort businesses. The company was founded in 1974. Okay. Multiples. Take a look at multiples. And yes, because it has a limited history, there's not a lot of multiples going on here. Okay, so somewhat of a growth multiple. Okay, so I have a lot of cash. This is like 85-ish net cash. 252, so around 170 market cap. Around 170 market cap. Oh, you did. Awesome, bro. No. I believe you, bro. I believe you. Don't worry about that. I will just now I get to, put you in here. Oh, okay. So actually this did you subscribe today? Because I think I have what happens is actually this is automated. The top part, the title at the top is actually automated so that when you do subscribe, it automatically replaces the name with the most recent subscriber. So did you subscribe before? If you subscribe before, then it's totally okay. You no need to redo it. But thank you. But if you want, for the sake of just having something pop out, you can definitely unsubscribe and then resubscribe. That'd be funny. Yeah. Okay, so back to analysis. This is like 170. Sorry. 85 is actually 165. Let's call it 170. Okay, operating income over here. So it's like 10 times EV EBIT here. 25 times PE. Yeah, so they have a lot of cash, right? So EV to just net income is also like 17 times, I guess. So it's trading at a growth multiple. Profitability. Okay. Okay. So decent, above 10%. Really high SG&A margins. Like SG&A is quite high. So okay, let's quickly look at their IR. Oh, also, how is like the audio quality and how is the stream quality? Because I did increase it to 1080p and increase like the bit rate. How does it look on your end? And are you using a desktop or a mobile device? That'll be nice to know how your experience is so far. Audio quality is good. Okay. I will continuously try to improve the audio quality. But volume wise, it's good, right? Volume wise. Do they have an English site or no? Oh, volume is good. Awesome. Thank you. Thank you very much. Is it lying about the English part? Because what the heck is going on here? Awesome. Sounds good. So they have an English button, but it's not allowing me to click it, which is okay. Okay. Now let's see. Now let's see. Maybe this is going to be better. Hopefully. Presentation slide. Please. Yes. English. Awesome. Okay. What are they trying to do here? Rest of 27 new store openings. We just do overview. Operates in retail, logistics, financial payment services, and retail technicians. The company operates discount-based stores that provide food, living wear, and home appliances. Okay, so this is like a grocery store. Also offers other utilizing IoT devices, software services. Yeah, real estate. Okay, so primary business seems to be food, living wear, and home appliances. That's like, I mean, that's as close to a grocery store as possible, right? Oh, thank you. Thanks for pointing that out. That is true. Trial holdings. Oh, Fukuoka. All I know about Fukuoka is that when I used to play an arcade game called Wangan Midnight Tune, the Fukuoka map for the driving game is extremely fun to play. You do a very, very long drift. Yeah. Okay, so a little bit of operating leverage here we can see. They increased 27 stores out of for a total of 345. So previously there were 318. A little under 10%, but still good growth, I would say. Like 8-9% growth. Thanks for sales growth is good as well. Ooh, operating profit margin is kind of low. Okay. Learn more about this business. I just want to look at what the segments are here. Okay, distribution retail business. Retail AI business. Interesting. What do they mean by retail AI? That's what I'm trying to figure out. I'm going to quickly look at what they say their business does first. I think that would be a lot more fruitful. Yeah, take a look at what their business is. Distribution retail. We operate discount stores with the concept of your daily necessity store. Our store network is based in Kyushu and expands nationwide. Store formats range from small to large, with medium-sized supercenter at the core. Yeah, they're trying to do Costco here. Our alignment focuses on food, especially fresh food, with a particular emphasis on tasty, ready meals. Non-food items include livingware and home appliances. The EDLP, everyday low price, is our policy, and we offer competitive prices. Okay. So I don't know whether they're doing some type of, SKU optimization where you have less items but have like good prices to attract people to go. The supercenter thing is also interesting, but I don't understand what the small to large format and medium size, like I'm still not getting a sense of where the competitive advantage comes from here. Yeah. So retail AI, our vision is to create the next generation shopping experience and revolutionize retail operations through the power of technology. Under the vision, we provide various solutions, including Internet of Things devices and software services. We're developing smart shopping carts and other products. We aim to provide customers with new shopping experience and eliminate inefficiency in the retail industry by collaborating with manufacturers and using data. Not clear what their value prop is though. Still. Other business. Real estate business. So, sure, top message. Make the world a better place through retail tech. So they're trying to create a better shopping experience for our customers by integrating real stores with technology. To this day, it is the ambitions that have been driving force behind our growth. While every industry integrates digital technology into business for transformation, we focus on revolutionizing the entire retail commerce. I believe the scale of this change exceeds even the Meiji Restoration. So why are we revolutionizing the entire retail industry? Is because we held a strong will to contribute to our customers. And that's not really a reason, but okay. So they're saying they're a technology company, but I'm not seeing. You're not giving me solid proof of any innovation here. Okay, 4 key strategies: strengthening existing stores, new store openings, accelerate new store openings to focus on SUC, improve profitability, improvement in the product mix and cost control, retail tech, retail evolution by establishing an ecosystem. So what they're trying to do is so they have some technology stack, automation of retail AI, acceleration of store openings across Japan, retail media, real commerce far beyond retail, next generation store retail platformer, long-term vision, enrich people's lives by eliminating the inefficiencies in the distribution and retail industry. Like, but I'm not getting what they're trying to be, right? Like, are you trying to optimize being like, hey, we get food delivered to your property, or right, we have an optimized basket of SKUs at our grocery stores where you can order them ahead of time on your app and you can come pick it up, right? Which is already happening in Canada and the US, right? So right, it doesn't take that much for a competitor, a current grocery store chain to implement this. I don't think. Maybe they're so stagnant in their previous business, I want to say, practices that maybe there is some opportunity for trial holdings to do something like this, but to be the region's #1 necessity store. Okay, so this points to them trying to have like a more optimized number of SKUs. Strengthen sales of in-house made ready meals such as pork cutlet bowl and seasonal growth. Drive the same store sales. Okay, so this is also competing with like 7-Eleven, or Family Mart or any convenience store, because they also have pre-ready made meals in convenience stores. Now we have to look at what is the location of these stores, right? Are they competing with convenience stores, or are they just slightly better than grocery stores in this regard? That's good. Same store sales has been growing for 47 consecutive months. So it could be something where they have some pre-ready made, items that are bringing people into the stores. So that argument I can buy. So the mega centers, super centers, smart centers, and small format. Oh, okay. It'd be interesting to figure out if, like, is this like a Costco competitor? Is this a Costco competitor? Is this a 7-Eleven Family Mart competitor? Like, what are these type of things? All right, small format I think is probably in relation to some convenience store type of strategy. Super center. So they said, but these are medium size, right? This is what they mentioned. Low cost store openings through in-house design and development. Complete the entire store development process, site acquisition, design, construction, facility management within the group to eliminate inefficiency in store openings. Flexible store designs optimized for trial, along with accumulated expertise in low cost construction through in-house design and construction. Support aggressive store openings. Okay, so what they're saying here is now they have the entire start to finish design, construction, everything they do in-house, and because of that they have lower costs than a competitor who relies on a contractor to do this type of thing. Okay, so this is their plan. So finalize store basic concept, building store policy and strategy, right? Look at what the market needs, site acquisition plan, refine P&L simulation, design, so do that in-house too, construction, facility management. They're saying that they can open stores faster. So some cost cutting in terms of like how they build out the stores. I think this is just an optimization process. But none of this is like, groundbreaking, right? Like this just means they have an optimized process, right? I don't imagine the margin differential is going to be that high, but okay, so sales breakdown, 74% food, 26% non-food, living hardware, apparel, grocery, groceries and daily goods, and fresh ready-to-made meals. So I think they're really going at the ready meal thing is kind of like the other, because if you look at the fresh including meals, that portion is greater than even groceries themselves. So maybe they have some type of attraction to them, attraction in relation to the ready meals, which would be interesting. So they acquired a company that makes ready meals. X trial. Also, such an interesting name to have as a company, because like it's not what you would think of like a company that makes grocery stores, I would say, or food items. Interesting. So they sell instant noodle and then karage and then dashi. Okay. So it's making private bands. This is also nothing out of the ordinary. This is also something that you would see in Canada too, right? So like Canada, there's Superstore, which is PC brand. They don't have to spend much on promotion, which is interesting. This might come from. Okay, this is actually kind of cool because that might mean actually the ready meals are actually attracting people. So they take food items at reduced costs or exclusive items as a selling point to attract people into their stores. So that would be good in that regard. So opening 7 new stores. Wonder how many they can open a year, right? If it's 7 per quarter, right? And then last year they opened, I believe it was 28. So this is also on track to open 28. Now, is their store openings going to be declining, or how is that going to go? Okay. Factors and labor cost increase. Labor cost increase due to seller store openings are the main reason for exceeding the plan was higher hourly wages for part-timers and in temporary workers. Meanwhile, salaries for full-timers remain within the plan. Okay, some technology stuff. Skip cards. Okay, this is what I'm looking forward to. It's like, what is it exactly about this company that's high technology? Because I'm just not seeing it currently. Like the things that are talking about, I see in like Superstore in Canada, for example. Complete payment through self-scan and payment gate passage, providing a new shopping experience such as reducing cashier workload and implementing one-to-one marketing in physical stores utilizing coupons and recommendation. Scan loss prevention. First, when assessor detects an unscanned item. Okay. Tablet. Display scan product data, total purchase amount, display recommendations and coupons. Okay, this is interesting. So you have a person comes in to buy something, they have something that tells you what's on discount and what is being promoted currently. That's good. Integrated barcode scanner. Interesting. So, oh, this is a new concept then. Okay, so essentially they have their own payment system. You don't have to wait in line. You literally just scan something in the cart and then put it in, and it detects if. Oh, okay. Even more comfortable with my bag. The only total amount of purchases while shopping. Okay, so this is kind of like an entirely different process, right? You incorporate the payment system, payment processing system within the cart. So that's interesting. That I haven't seen before. 21,000 skip cards, number of stores 249. Oh, so this is a new experience. So they might actually still have some physical checkout lanes or self-service checkout lanes then. Oh, okay. So 25% of people use it. Monthly sessions. 4.9 million people have instances of people have used it. That's labor costs. Number of customers passing through per hour. Demand checkout, you can only do 100 per hour. Self checkout, you can do 295, but then with this skip cart thing, you can do 392. Oh, interesting. Number of purchases per hour. Indexing man checkout 3,100 items. Okay, so I don't think this metric is completely makes sense, but let me just read this. Okay, let's think about that. Why this isn't really the best. Actually, let me think through this real quick. Like, we don't know exactly how they calculate this, right? Is it from the point that you scan the item that it becomes purchased, or is it after you fill out your entire cart? Oh shoot, my internet. What happened to my internet? Is it back? Oh, okay. Sorry guys, I don't know what happened there. Did the stream? Okay, the stream was about to end, but then the connection came back, so that's good. Okay, so where am I getting with this? Okay, so I can understand this part where because you can avoid the queuing line, right? That yes, more customers would be passing through per hour. That makes sense with the skip cart. But the number of purchases per hour, I don't buy that part, and I don't know how they're calculating this because they're not really describing it. Because like let's say I have a normal basket of goods, right? It takes the same amount of time for me to grab all the goods that I usually would buy. In that same time. Oh, thank you, eight. Are you heading out now? Thanks a lot for being here for the last 2 hours. Really appreciate you engaging with in the chat, and please continue to follow my future live streams. Yeah, and yeah, in the future it'll be way more optimized. Yeah, sorry if there's been some rambling, but yeah, I'm really happy to have you, you know, uh, participate. But yeah, I'm still going to be on the stream probably for like maybe another hour. I just want to go through some companies. This company looks kind of interesting, so I'm going to spend more time on this one. Yeah, what I mean is I don't buy the argument that if you use a skip card, you're buying more items, right? And you're not buying 3 times more items or 4 times more items than if you were to, let's say actually take a normal shopping cart, fill it up, and then go to a cashier's checkout or at the self checkout. Like this, I don't know how they calculate this. It doesn't make much sense to me. And an opportunity I see in this is like because I've recently looked at a company called Glory, right? And Glory is they make a self checkout. So if you look at my my Substack, I wrote a stock pitch on a company called Glory, and what they do they do one thing they do cash recyclers, but they also do like self service checkout for grocery stores. And so yeah, you guys can read about it. And this is a completely different approach, right? One thing they could do is instead of buying these grocery or opening these grocery stores and actually putting the skip cart in, if this is their defining factor, why not just if they have this much productivity gain, they should definitely just like sell this to any existing grocery store. I think that would be way more fruitful, right? Potentially. I don't know if I'm right or not, but that's potentially the case. Nice. I see there's 3 people watching right now. Thanks for joining in and tuning into the stream. If you guys have any questions, feel free to comment below. And if you guys aren't subscribed yet, please subscribe. Thank you. Okay, so growth strategy. Let's take a look at what their growth strategy is here. So promote development for ready meals and products to enhance food branding. So they're trying to go for like a branding approach. So think Kirkland, think PC, PC Express, that type of thing. Eliminate unnecessary discounts, price increase for value-added products. Okay. Enhance in-store value and price promotion. Strengthen seasonal merchandise. Launch PJ team. Enhance buy online, pick up in the store. Yeah, so this is already happening in Canada. Nothing new. I'm not sure if Japan is just late to this, but yeah. Build organization for underperforming stores and enhance operational thoroughness. So yeah, and optimize current stores. Stable product supply to eliminate opportunity loss. What would be interesting is they have any commentary on like loyalty points, right? Like, or how are they keeping track and extracting data from their current customer base? That's something that also is highly valuable, which I haven't seen yet. High value shelf. Display high margin items to push up. Okay. Strengthen GP, provide gross profit driving products. Expand ready meals developed by chefs. Enhance trial original products. This is in the right direction, yeah. Key strategies. Strengthening existing stores. Makes sense. New store openings. Improve profitability in retail tech. So this is the most important differentiator. Accumulating data and deeply understanding customers by selling skip cart and acquiring more SU Pay members. Is that what their membership program is called? Enhance category management through data sharing and analysis with manufacturers and wholesalers. Okay. So let's see about strengthening existing stores, providing wide selection of products with a particular strength in food. At EDLP, satisfying customers as local daily necessity store. So essentially, they're trying to kind of, they're like a, how I see it probably is you kind of have to go, these stores are kind of out of the beaten path, probably less convenient than a 7-Eleven or a Family Mart. But then because of these products, right, they're a daily necessity store. Right? You would go in and buy a soba, to buy a pork bowl, some type of food item that you would daily intake, and become a store that you frequent quite often. Key strategies, retail AI tech. So this is probably the most important thing for this company. They just kind of slap on an AI. I haven't really seen what the AI portion is. I think they just slapped that on right now. As skip cart and SuPay and camera, expand royal customer base, convenient shopping with payment via the SuPay app, skip cart for wait-free checkout and 24-hour facial recognition payment via camera, effective advertising and promotion that I can get behind. In-store signage, stimulate unplanned purchases. That's not really technology. That's just like Don Quixote, right? If you want to stimulate people. Empty link, deep customer understanding through thorough data analysis. Sharing and analyzing data with manufacturers and wholesalers to optimize product development and shelf space allocation to use for okay. Sales floor efficiency, improve in-store layout and optimize shelf allocation. I mean, stuff that any grocery store would do anyways. Reduce cashiers, yes, is one of them. Cameras to improve product replenishment and shift cameras, store staff to high value added tasks. Stacking behind. Automatic price reduction of ready meals by linking cameras. Improve efficiency of store operations and reduce loss. Right, because the ready meals are pretty much going to expire. Like if you make a pork bowl, it's gonna, if you don't sell it by end of the day, you kind of throw it out, type of thing. So having cameras to track that, but I still don't see the AI part. That's the thing. So yeah, the company is on a growth trajectory, and now I think the analysis right now is pretty. Okay, continue first. Super center, 4,000 meters squared. So how big is a Costco? What is that? Okay. SF2 meters squared. Actually, what was it just earlier? 147,000. Okay, it doesn't even compare. So it's like a third the size. Sorry, yeah, a third, almost a third of the size of a normal Costco. $60 to $70K items. Oh, they have an 8,000 one. But this is closer. Oh, so this is a mega center. So super center is the medium. What's that? Uh, hmm. This is not what I'm thinking about. Is it Tobu? Seiyu? Hmm. There's another store I'm thinking of, but I can't. Yeah. Okay. The thing is, I don't know the top competitors in the grocery business. They have so many stores. That is quite the growth that you're trying to say it's going to be able to attain. Huh. 8.8 times. 8.8 times. Okay. But didn't wait, my previous calculation was that this company has a lower enterprise value. Double check. And get a financial statement out of this. Not just like the normal one. Oops, I just closed the Japanese handbook. Crap. Okay, perfect. So I'm gonna quickly go through that because the whatever is on the on Koyfin is a little bit outdated. 1 for 1A. Trial holdings. 1 for 1A last quarter fiscal year 2024. Quickly do that. This is what's the share price? 2062. Go. Okay, and appeared shares. Treasury shares. Okay, 252 market cap. That's similar to what is quoted here. Hey, cash. 47 million. Investment securities. There's no short-term investments here. Oops. You could include leasehold and guaranteed deposits, but the thing is, not getting a return because they're likely going to continue to rent the place. Short-term debt. Okay, 2 times book. There's a bit of the NCI. 2.25%. What is the dividend? They are planning a 16. Forecast, okay, 0.8, so barely any dividend. Book value 125, 221. Debt 22, cash of 53. Hey, wasn't? Hold on a second here. This is Q3. Oh, this is 9 months. Oops. One second, guys. I am heating up in this hoodie. I need to take it off real quick. Okay, I'm back. How come I remember the Koyfin one showed a really high enterprise, like a lot of cash. Oh, because I didn't look at the most recent period. That's why. What? Q2. Okay, let me double check Q2 because that could be the case, right? Double check. Oh, they did have a lot of cash. Did have a lot of cash. They'll probably use it on something. So it's probably a cash flow analysis there. So they spent the cash on something. And they probably spent it on some PP&E. I mean, is there a cash flow statement? We just easy. No cash flow statement. Great. I mean, they probably commentated somewhere. No commentary? Okay, well, I can put this side by side and compare. That would work too. And I can kind of decipher that. Okay, so assets. Did they take an impairment somehow? Did they take an impairment? No, they made money. What the heck is going on here? Or they pay down debt. That could be. It doesn't really go down. On the liabilities. Oh, accounts payable. Okay, so okay. Accounts payable. It went to accounts payable. That's where it went. Okay, so that's why it's very different. Okay. Got it. Okay, so the enterprise value calculation is correct. Excluding long-term investments, including it be 221. So let's say 220. And then 220 analyst estimates of 25. Yep, around 8 times, 8.9 times, 8.8 times. Yeah, is it undervalued? It's not that undervalued, but there's some interesting things about this. And this could pose a risk, like if they decide to take everyday low price. Yeah, I also want to figure out what is their loyalty program like. Like, how are they keeping customers like engaged and stuff like that? Okay, payment app available at trial stores throughout Japan. Okay, so SU Pay, so they're also like kind of a financial company. Delivery of coupons to each app user. So data analytics here. I can get behind that. E3 Smart, low cost, high speed data processing platform of strength. Okay. MD like data analysis platform for sharing and analyzing data accumulated and stored. Okay. Retail map proprietary tool to analyze trading areas based on the combination of statistical information, purchasing data accumulated by trial. Helps to make decisions on store openings and closures to improve existing stores. Well, this is very simple. This is just like what's population density, where's the most dense, what are other grocery stores in the region, and that kind of stuff, right? So you want to optimize for like the population per store type of metrics. Gift card, no checkout lanes, easy checkout, personalized in-store promotion, facial recognition, self-checkout without age verification. Okay, so that means you cannot buy alcohol or tobacco then. Camera solution, giving insights into customers' in-store behavior and monitoring out-of-stock items. That's interesting. Driving realistic in-store promotions with use of sound and visual effects. Okay. Overview of Trial Go small format store. The satellite store of Supercenter realized high quality service at low operation cost by combining our strength in retail and technology. Small stores based on frequent deliveries from SUC. Strictly selected from 70K SKUs of SUC. What does SUC stand for? Supercenter? Supercenter. Small stores based on frequent deliveries from supercenters. Tasty fresh ready meals offer high quality fresh ready meals via frequent delivery of merchandise. Low cost, low risk in opening new stores. What's the point though? Feature 2, automation by retail tech. Remote monitoring. Demand forecast. Dynamic pricing. Self-checkout with facial authentication. Oh, they do have alcohol purchase. What? But I thought I said there's no age verification. Without verification. Oh, okay, that's weird. Effect 1, reduction in number of operators and times. Unmanned checkout. Yeah. Auto modifying and merchandise. Optimal product offering based on demands from customers. Okay, I mean, everyone's doing that, honestly. So honestly, my fairest opinion on this is that I guess this is self-checkout, shelf allocation with camera is good. Skip cart idea, if it's true, is good. But if I had more time to look in this company and look at what is their loyalty program, what type of growth that are they aiming for? Like how many stores do they think that they can open up to, right? Because currently, like last year they opened 28 stores, right? And this year they're on track to open another 28 stores as well. Then am I happy when they have 500 stores and can only open 28 stores? Like, is that what I'm paying for? And whether this 8.8 times current 12 times, whether this multiple is worth it. I'm gonna take a look at the multiples. Yeah, why? I mean, Q3 is already out, so why the heck is Q2 still not having the multiples? This is kind of not really good. Some books 3 times. I mean, that's no longer the case, right? Let's take a look at the. Okay, so it used to be a lot higher. I think at 10 times this would be a decent investment, honestly. It looks like it. It looks like it. It could have that potential. 220. Let me quickly take a look at building. Hmm. Why is net income margin so low though? Why is it so low? Operating profit currently at 2%. I guess their SG&A is high because they're trying to open more stores. Um, Low interest expense. Revisit the debt portion. 22 million debt. We have cash on hand to pay that. Yeah, I wouldn't mind purchasing this at 10 times EV, but I wouldn't mind doing that. But currently it's, yeah, it's close to there. Yeah, so if I have more time to look into what's the growth trajectory, can it apply tech to other areas? Can they outsource the tech and actually just sell it? But I guess if they want to maintain their grocery store competitive advantage of utilizing the skip cart, then it would be to keep it within in-house. And then the second component is then what's the loyalty program? How are they, really truly tracking the data analytics? So rather than doing population type of data analytics, I think person to person data analytics is much better in this regard. So yeah, this look interesting. I would on the tier list. Let's see. I think this one is interesting. It has potential to be an A, honestly. It has potential. Very underfollowed. Okay, we can put it as, is it A? It's not too deep value. I'll just put it as B. But it is a better company than 4331 though, right? And it's disrupting, so it's trying to take market share, so I do like that. So there's a good TAM for that. Yeah. So we're hit the 2.5 hour mark. Today was interesting. We took 2 special requests and then we did 1 company in the Japanese Company Handbook. I kind of went on, like, the thing about me is like when I see a company that looks interesting and I don't mind spending more time on it. But we definitely have to create a more optimized process, because if I spend 45 minutes on one stock, it's definitely going to take a long time to even complete this challenge. I might not be able to complete it, right? But yeah, I will continue to streamline this process, get it better. Yeah, but it was good to be able to know that the audio quality today was good, and the stream quality and the the picture quality was also good too. So continuous improvement. Do an intermission. Okay, everybody. So for those who are still around, can you just give me like what do you think are areas I can improve? What did I do well? And what do you want to see in future streams? Currently, there is 1 viewer. There was 3. Oh, 8. Thanks for staying for the entire duration. I thought you had left because you said thanks for the stream. I thought you had left, but I guess you might have misunderstood because I said the internet connection was bad. I don't know what happened. It showed me the internet connection was bad and it was going to end the stream, and then the internet connection came back strong. So that was good. And yeah, thanks for tuning in. Nice. Yeah, and 8 you before I do a live stream, I usually ask people if they have any special requests. So if there's any Japanese companies that you want me to go over in the future, feel free to DM me or pop in chat and say, hey, I want to request this one. I should have time to do maybe like 1 or 2. Maybe in the future I'll just do 1, because it took me a while to get through these two companies this time, so that I can, you know, finish the Japanese Company Handbook challenge. Because right now I'm still on page 93 and I only went through like one company. But I guess today we had some higher quality companies, so they weren't like obvious D's. So yeah, it took a little more time to kind of understand the companies, which are fine, which is fine. Yeah, so yeah, take and give is because the core business in and of itself is declining. So you know, anytime you have a sum of parts type of argument, if you look across Japanese valuations, like sum of part companies, where you have like two partitions of it, if the main business is not doing as well, the valuation takes a while to even re-rate. The story of 141 is different. It's more of a growth story, right? So people are kind of already behind the idea that this company is going to take on more market share. I really want to find there was a grocery store chain. I need to find it. Okay, I need to find it. There was a Substacker who wrote about what is his name? Or maybe even a convenience store chain. It's not Lawson. Yeah, there's a Substack I used to. Through House acquisition at Welchia. I am not aware of that one. But didn't Trials say I wasn't aware that they buy grocery stores. I was aware that they were, you know, like in the beginning, it says here that they plan out the entire process, right? That's kind of like one of their perks is like, yeah, they plan out the entire process, and from curation of store locations to planning out the design to construction, they do in one-stop shop. What type of acquisitions are you aware that they do? Or did you just mean acquisitions as in store opening strategy, I guess? Let me just put this onto the side so that I can find the former company that I'm trying to remember. Sweet Stocks is from Sweet Stocks. Let me try to find the company. Oh, Kobe Busan. Yeah, yeah. The company is Kobe Busan. Runs Gyomu Super, a chain of hard discount supermarkets that can be described as the Aldi of Japan. Exactly, Aldi. So what I thought the strategy of trial might have been is like you do a Aldi thing where you have limited SKUs and then you also have that skip cart. Drugstores. Yeah, so I think the how many locations does this place have? Let's see. Stores, 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 stores. Oh, okay, I missed it. 189 Gyomu Superstores. Wait, hold on. This is not them. How many? Okay, I'm gonna do the cop out method and just ask them, how many stores does Kobe Busan own? Hmm. 1,023 franchise stores. Oh, this is a franchise. Yeah, so what's interesting about Trial Holdings is it sounds like they're company operated stores, right? Right, and if they have 300 now, 350, so they're like a third the size of Kobe Busan, right? Could there be improperly operated Kobe Busan stores that they can take over? That's one. Number two is then, you know what? Who are the competitors of Kobe Busan? Yeah, so if I had more time, it would be analysis on what the market looks like. Are there any other competitors of similar strategies? This is my first time looking at a store of a skip cart type technology, which is interesting. And then look at how can it expand beyond like the current market, because literally in Japan is one of the most competitive markets in terms of buying ready to made goods, right? Like for example, you have so many 7-Elevens, Family Marts, Lawson's, right? And then those also offer some like ready made meals. So then I think that Trout mainly competes with, well, the ready to be made meals competes with 7-Eleven and Lawson's, right? But then the grocery aspect competes with the likes of Kobe Busan and whoever the other chains will be. Um, and then look at, is it possible to franchise, right? Because they currently have company owned stores. What if they were to franchise, right? And because they franchise, they have that technology stack. You can basically charge some type of fee for utilizing, their proprietary, you know, you know, yeah, you can charge like some franchise fee because their business model works, right? Um, so yeah, that could be interesting, and that would also accelerate the growth. Or they want to be completely company owned, which is the slower method. Um, yeah, it'd be curious to look at, in a given year, how many stores does Kobe Busan actually close, right? You know, like, and also look at, are stores opening or stores closing over time, and then what is the trend from the other places, right? Because if you have any, poorly operated stores, that gives, and they close, that creates a market opportunity for trial, right? Um, and I have no concept of legitimately how big trial is, right? They have 350 sons, 300, I think it was 45 stores, right? So it looks like they have opportunity to grow, but I have no concept exactly like, oh, what is the biggest player? Maybe the biggest player has like 2K stores, right? I don't have that information. So I do a market analysis of who the competitors are, what type of strategy they implement, what is their technology stack like, how are they doing the data analytics, how are they doing the AI, how are they making checkout a more seamless part of their business. And because grocery stores are labor intensive businesses, right? The reason why trial might have an edge is because you have these skip carts that bypass the need for actual cashiers, right? Which is what their competitive advantage is. So yeah, I think that, you know what, could it be an A? Now that I'm thinking about it, could it be an A? The thing is I'm cheap, right? So like in buying stocks, I would still like a lower entry price. 18. Newly listed, it could drop. honestly, like in Japan, because of traders and because this is 141A, so it's it's not on the prime market, so it's on some other exchange. Like it could definitely, drop. Potential 3,500, so that's like 70% upside. 70% upside. Yeah, this one's this one's actually pretty interesting. This one's actually pretty interesting. It might be. Yeah, I would be like B plus here. All right, and then this would just be like a B, maybe B minus. Yeah, I feel like it's more of a B minus opportunity here. So I would categorize like that. I would categorize like that. Okay, yeah, I'm gonna wrap up. Thank you a lot for joining me. Eight. Please join me in the future. And yeah, this is Continuous Compounding. Thanks for joining me. And remember to like, subscribe, comment, share, repost, and look forward to my future live stream.